Hello guys, welcome to my new video on my YouTube channel. Today I'm going to show you how my investments have been doing in the past days, what I have been buying, what dividends I have received. We're going to check my Excel sheet, see how that's going. And yeah, I hope you enjoy. Let's get started. Okay guys, so as you can see, this is my portfolio. This is what it has been doing in the past month. Last video I recorded, if I'm not mistaken, at around 25th or 26th of December, so around here, more or less a month ago. So this is quite representative of what has been happening in the past month. My portfolio has gained 1.68%, and I'm going to show you in which holdings we've seen some change. Let's get started. Okay, so in first place we have Stag Industrial, which I right now have 2.3 shares, and as you can see, it's been performing really well, 4.56% up. I put in 70 euros into it, and it's been doing really well. Then, as you can see, Realty Income, I have more than a share right now. Hercules Capital, we see, has been performing a bit better in the past month. It's up, I believe, yeah, up 5%. That's quite good. And because it's got like a really high yield of 10.36%, so I'm happy if it just keeps the value and the share price doesn't go up, because I need to be reinvesting the dividends I get and putting them back in to other companies, or maybe the same companies. Then we have WP Carry, which I haven't been buying, I believe. I haven't bought. We'll check now. Then Altria, Microsoft, Johnson& Johnson, PepsiCo, and I believe I have only added two companies since the last video, which have been Apple and American Express. I'm going to show you why I decided to invest in these companies right now, and also we're going to check the price to see how they've been performing. Okay, so Apple, as you can see, is up 4.42%, and American Express is roughly down 1%. Then we have Medical Properties Trust, which has been performing very well, taking into account the change in currency that we've had with the euro and the dollar, which has been affecting negatively my portfolio. So, taking that into account, the portfolio has been doing very well in the past days. If someone was wondering, the new money difference that I had from right now to last time I showed you, um, the only gains that have happened because of the market have been 11.55. The rest has been new money going in, so not gains. And if you want to see in my portfolio pie, here you can see what percentage of my portfolio each company is. So Stag Industrial, Realty Income, Hercules Capital. I believe this is WP Carry, Altria, Microsoft, Johnson& Johnson, PepsiCo. This is the S&P 500. That's Alrock, I believe. Texas Roadhouse, another S&P 500 index, Main Street Capital, and Procter & Gamble. These are small holdings, 3.3% in Apple, 3% in American Express, 2.5% in Medical Properties Trust, 1.43% in Sixth Street Specialty, and then 0.85% in SWK, which I bought because I thought it was at a really attractive price. And as you can see, it's up. We see it's up 5.65%. I mean 12.96%, which is 65 cents. And if we go back to my position, this is for the day. The euro has gone down because the markets are not open yet. This is right now 9 a.m. on the 24th of January in Spanish time, so about 3 o'clock, 3 a.m. in New York. Markets haven't opened yet, only European ones, and some haven't even opened yet. So if we go to the past week, I'm only up a euro, like 0.13%. Past month, as we can see, we're up. Okay, so now let's go to see how many dividends I have earned. Okay, guys, so if we go to the place in Trade Republic where we can see what I've been earning of dividends, we can see that the last video I recorded it about here. So I got 6 cents, 4 cents from Texas Roadhouse, 20, well 19 from 6th Street, 12 from the S&P 500 index. These are the buys that we will check later. Then we've got Pepsi, 10 cents, Altria, 0.68, Medical Properties, 20 cents, Albrook Capital, 69, Main Street Capital, this is a monthly dividend payer, 15 cents, WP Carey, 0.51, Realty Income, 0.21, and we also have Stag Industrial, 0.20, which is also a monthly payer with Realty Income. Okay, so let's check what I have been buying. Okay, guys, so as you can see, we're in the same place as we were before, and I've done 2 buys. The first one on the 2nd of January, and then we did another round of buys the 16th of January. So let's check. First, 10 euros in Apple, 10 in S&P 500, Altria 5, American Express 10, Johnson & Johnson 5, Medical Properties 5, WP Carey another 5. Okay, I have been buying. Main Street Capital 5, Hercules Capital 5, Microsoft 5, PepsiCo 5, Procter & Gamble 5, Black & Decker, SWK another 5, and Texas Roadhouse another 5. And this adds up, I'll put it in the screen right now, what the first round of buys adds up to. And for the second round of buys, we've got another 10 of Apple, 10 of the S&P 500, 5 for Altria, 10 American Express, 5 in Johnson & Johnson, 5 Microsoft, 5 Pepsi, 5 Realty Income, 5 Procter & Gamble, 5 Stag Industrial, Texas Roadhouse, and that will be it for all the buys I've been doing in the past month. Okay, now we're going to see what I'm planning to buy in the next days. So if we go right here to my buy orders, in 9 days, this is what I will buy: Hercules Capital, Microsoft, Main Street Capital, PepsiCo, WP Carey, Texas Roadhouse, S&P 500, 10 euros, and 5 in American Express. Okay, so let's go, and I'm going to explain why I have invested in American Express and in Apple in the past days. Okay, guys, so we are in this page which is called Qualtrim. It's of another content creator on YouTube, which has a very big portfolio, and he's created this tool which is great to see what is going on with a company at first glance without doing too much research, and it's very visual. So here we can see all the metrics. Year to date, Apple's up 13%. The past, it's down a lot from its highs. The valuation is really good in my opinion. 23 forward P ratio is great for company as safe as Apple, and as reliable with the market dominance they have right now. And price to free cash flow is 5%. Free cash flow yield is 5%, which gives it a 20 free cash flow, price to free cash flow yield, which is great. And the payout ratio is really, really low at only 15%. I mean, the dividend yield is not high anyway, but as we can see, the company has been doing great things. In the past years, it's been buying back its shares like crazy. Started out at 26 billion, now it's down at 16 billion, so going down about 5% of annually, 5% shares outstanding less every year, which is great. The dividend has been increasing, and the price right now is quite low. So I have been buying some shares because I see great value. As we can see, the cash has been declining in the past years, which is not great, but they have been paying off some of their debt also, as we can see. So yeah, I'm not worried about that. Earnings per share up in the last years, as we can see, compound growth rate of 15% every year, which is great. And yes, I'm going to show you why I've decided to buy American Express as well. I think the price is not given as much credit as what the stock is worth, and I see value in this company. Price to free cash flow yield is really high at 14%. I think lots of people are scared of a recession that might be coming, and that's why this company, which relies on consumer spending, is being priced down. But I think it's a really powerful company, and it has market dominance. So I don't think it's in any kind of danger. As we can see, it's been growing its dividend a lot past years, past like 40 years. 10% growth rate past 10 years. It's been buying back its shares like crazy, as we can see. 4% less shares outstanding every single year, which is really good. And forward PE ratio is about 14, which I think is very good for a company as strong as American Express. So that's my reasoning behind the bets I've done in these companies. Okay, let's go and check my Excel spreadsheet. Okay guys, so here in my screen you can see my Excel spreadsheet, which I have been putting some effort in creating. Here we see the price of the stock for one share in dollars, price in euros for one share, market value of my shares multiplied by the price of each share in dollars here, in euros here, and my cost basis in euros, how much I've paid, the current dividend yield, the payout ratio, which is not really accurate in some of these companies, but I just wanted to add it here. Then the annual payout in dollars, annual payout in euros. We can see the ex-dividend date. And here is the annual dividend I get in euros for every share I have. For every position I have already multiplied by the annual payout of its share. For example, if I've got roughly 4 shares and it's 1.32, I multiply this by this and get the annual dividend. And this is the gain or loss in the shares in the since purchasing the stock, since I purchased them. So as we can see, the biggest gain has been SWK, then Medical Properties, Stag, Alro Capital, Apple, WP Carey, Texas Roadhouse, and last one that is in green is Main Street Capital, and the rest are in red, as you can see, they're down. This one I should remove it straight away, but I haven't done that yet because this is only a €1 position, I shouldn't have this here. Okay, so here we can see the beta, which is checks the volatility of the stock in comparison to the total stock market, the S&P 500. So as you can see, the S&P 500 will have a beta of 1, and because that's like the underlying stock for the beta, and we can check here the 5-year CAGR, which I have introduced manually because I haven't managed to get this from any website yet. And okay, here we can check the every year how many dollars buys, what $1 buys in euros, the total portfolio CAGR, which I want to increase a lot. So I'll start buying lower yielding stocks to increase every year a lot more what I'm earning. And the total portfolio cost is 677 euros. We have a 669 value right now, so I'm down 7 euros, and that is 1%. That's without taking dividends into account. Of earned dividends, we have 5.69 euros. Cash right now in the platform, I have 33 euros. And my yield on cost is 4.62%. Total returns accounting for my dividends, I'm down 1.4%, and this is the Trade Republic balance, which I use to check if my calculations, I'm doing them right or I'm not. Okay, so this cash is earning 2% yearly. Here I have another account which is earning 6%, but I have not introduced anything here, so we'll leave that for another day. And as we can see here, my total portfolio earnings is 31 euros and 93 cents every year. So I will be earning 2.66 euros a month, 9 centimes a day, and quite a lot less, a third of a centime every hour. This is something that I just wanted to check how I was doing. And anyway, this is what I wanted to show you today. I hope you enjoyed. I will try to show you more portfolio updates in the next months. So yeah, hope you enjoyed. Don't take anything I said in this video as financial advice. I'm only sharing what I'm doing and what I'm buying in the stock market. You need to do your own research to check what is right for you. Hope you enjoyed, and see you in the next one. Bye.